All right, ladies and gentlemen, I hope you had a wonderful day. The stock market was absolutely insane today, and believe it or not, it had nothing to do with data or equities. It was all about the Japanese yen and what was going on in currency land. So I'm sure by the middle of the day, end of the day, even the morning, you probably heard about this, but if you didn't, it is very important, and it's not just about the yen gaining strength. Not only has the yen been clobbered, but the real issue at hand is a change in Japanese policy, and if it does in fact occur, it is going to be bad news for the stock market, the bonds, and a lot of other things. So, Chad, we got a lot to talk about. I want to go over that. If you don't remember, we made a play just 2 days ago. Go 2 watch lists back. You will see that Japanese yen play. We were talking about it. Even brought it up a lot this year, too. But the thing I want to highlight before that is the fact we got big data, and tomorrow is the non-farm payroll. So I got a little breakdown there. We're going to start with the NFP, then we're going to get into the Japanese stuff, then I got the plays for you, and I have to tell you right now, tomorrow's a big data set. It is bright and early, 1 hour before the bell, 8:30 a.m. Eastern. We will be live, youtube.com/the stock market. We're going to have all the news, the data, right when it comes out live, and that is going to be 15 minutes before the event. So hopefully we see you there, but we're expecting a lot tomorrow. There's even going to be an even bigger follow-up, so I hope you're ready for all of it. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday. Oh, wait, I already said that. Run it, baby.
Walking to the couch, it's the joints on the legs. Live in the hills, but still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, I wish there was more to show you about today. You had the little pre-market gap up. All we did was not sell off the open. You closed near the highs, but it's like we were really setting up for the data tomorrow, and then everything that happened with the yen was very distracting. It brought the dollar down. It even kept the bonds down. We're going to talk about that a little later, but for the most part, the market and equities, they're in their own world as we are waiting for the data and the narrative to change. So to start off with the keys, we need to talk about what is going to happen tomorrow, the non-farm payrolls. That will be the main event, but don't forget, there is still a follow-up with that CPI, but if there is going to be a big reaction, it is going to be tomorrow, and everybody is waiting for that data. So as far as what to expect, right now the consensus is between 180 and 172,000. Usually, I would give you one number, but the thing about this release, I've noticed that a lot of analysts are all over the places, and I've checked in multiple areas, and I've seen different numbers. So it seems like the general idea is a number around 180 to 172, which is kind of high, but then you go to Bloomberg, and they have been talking up a lot of these narratives. They are at the lower end of 150. If you really want to see a good reaction, I would be watching 150 as the number, but even if you get in this range, it might just turn into a awkward, weird day, and then everybody punts to the CPI and Powell next week. So it's pretty simple. You've already heard this many times. Bad news is going to be good news, but I will tell you this here. With all of the weakness in the labor market and some of the trends, if we get a number below 100,000 on the non-farm payrolls, that will be bad. I really think if it is too low, people will really start asking questions. Then they'll get worried. Then they're like, okay, maybe the Fed does cut, but it won't be for the right reason. That would hurt that whole Goldilocks soft landing narrative. So if it's too bad, we will get a negative reaction. Anything 150 to 130, even like 120, maybe 110, I do think that will cause a positive reaction in the market. Now, unfortunately, I hate to hit you with this caveat. Although tomorrow is important, it doesn't have to move the markets. Why? Because we have already priced for perfection. I'm telling you, these analysts and the consensus for all of it, it's all over the place. But generally speaking, everybody is expecting some weakening of the labor market, and that has been the trend as of late. So if we get a low number and we don't get a crazy reaction, or even better, it does all of the reaction pre-market and then you sell off in the morning and then we wait till Friday and have a weird end of the day move and then it really does nothing. We've seen that many times, but this time around, everything is priced for perfection. We're already pricing in rate cuts here globally. Now you even got to throw the yen thing into the mix. So that's what you got to watch out for. But when it's all said and done, you really need to understand what tomorrow is about. We are going to be getting new info. And if that furthers along the rate cut narrative, it will be a driver, and then people are going to tie that in to the big data next week. But we've spent about 2 weeks in the same range. Some good narrative, good movement, add to the story a little bit. That could get things moving. But if there's nothing telling, well, maybe we stay stuck like this or even go a little lower until we get the meat of the bone. Just Powell. Again, CPI might even have the same reaction on Tuesday if it is not a blowout number. So those are the first two keys I want to give to you. Like I said, we will be live in the morning, and tomorrow a lot of eyes are going to be on that. So hopefully we see you there. But now let's talk about Japan crashing our stock market. Now, maybe that's a little dramatic. I have talked about this in the past, but I really need people to understand this one. The Japanese yen move today was a real reality check, and it's not because of the yen. It is because of an unexpected policy shift that may be happening. What happened was that you had unexpected comments from the Bank of Japan, Ueda, the head. He said, well, it's going to be tough towards the year end in terms of monetary policy. It came off very hawkish, but even after that, he had a meeting with the president of Japan to discuss policy. Everybody took that as a very hawkish sign, and the fact that there was discussion already from the Bank of Japan about ending negative interest rate policy, this is the meat of the bone. The yen is just reacting, but just like us, you see things react here in America. What are we reacting to? Bonds and policy, what the Fed is going to do. Negative interest rate policy, that's what NIRP is. Japan has been like that for almost a decade now, and if they get rid of that, that will indeed be a huge policy shift. And pay attention, everybody in the whole world, even us, we're talking about cutting rates. They are now talking about raising rates from negative back to positive or break-even territory. So here's what I got to tell you. This is why it would be negative for the stock market, because if they end negative interest rate policy before the end of the year or whenever, say goodbye to your bond rally. Why? Because everybody, once the rates go up in Japan, they're going to pull their money out of U.S. bonds, even U.S. stocks, and put it into the yen and all of those Japanese equities. Some people have already done it. You could go ask Warren Buffett about that one. But all in all, this is a big deal. But just like every time we've seen the yen move, nothing has happened. This is all about a week or two ahead of the Bank of Japan. There's a little bit of rumor, hawkish comments, and then sure enough, they barely move the marker, and then everybody's disappointed, and then you start punting until the next meeting. So I've already been saying either end of the year or beginning of next year. So we're really zoning in on that last couple of weeks here. If something happens, it's going to be a big deal. If not, we'll get to react to U.S. and everything domestically, and then you may start hearing about the yen a lot more towards the beginning of next year. So that's what I wanted to share with you. I hope you're ready for it. And if this has your interest, you might want to stick around for the plays because I got one for you. But now, let us get into the plays. So, right off the bat, I'm going to make you wait for that yen one. I know, I'm sorry. I know. If somebody tag it in the comments, I'm sure somebody, shout out Devlin, man, anybody else who be posting, living on the legacy of UMAD. If you know, you know. Anyways, but right off the bat, man, I hate to sound like a broken record, and I said this last time that I sounded like a broken record, but the Russell, that's it, man. Everybody is still looking at this thing. Just because it had one or two bad days, don't be fooled. It has still been the outperformer. Our double dips, the plays even from yesterday, they are doing good, but it's very simple. A good jobs report, a.k.a. a bad one, but not too bad, it will help out the big stocks, but the narrative will move forward in terms of the rate cuts and all of that, and that will push the cyclical stock front run, and that's where the Russell has been benefiting as of late. So I'm still in both of my plays. I have the M2K from last week. That one's up a lot, and that double dip, we sold out for profits. I bought the low of yesterday. It went up today. I thought I would sell it out, but I figured, hey, today looked a little different. It was holding up. Let's let it ride, and I really had a good entry on it. So like I'm thinking for tomorrow, I may cut it out in the morning if it's pretty much around the same price. I think now I got like a $700 profit, but if there's a good melt up before the data and we got a lot of cushion there, maybe because of the yen or whatever else it is in the morning, I would be down to ride this play and play the data. I do think the non-farms will come in lower, but then again, a lot of the data lately has been weird, but I'm not really worried about tomorrow. I'm more worried if it comes in below 100,000. If not, though, I think the market could at the very least hold up the range, or at the very best, it's going to find a rally out of all of this. So definitely watch the Russell tomorrow. This is what we said at the last set of data. That is play number 1. Then play number 2, CMG. Chipotle. We were just talking about the food plays yesterday as well, but you also had AMD. We brought that one up, and it went crazy, and I hope you noticed what happened with AMD. Everybody's like, oh my gosh, $400 billion. Everybody reacted to that news today, but while you were watching that live on stream, it literally on the presentation said $400 billion on the giant monitor behind Lisa Su as we were watching. So very interesting reaction because AMD went crazy. You even had McDonald's go up a little bit. I think they went down. Then Domino's, they had an investor day and they went up like 6%. So you had the same thing out of Chipotle here, and I think it could be a good one tomorrow. They were talking about adding or doubling their stores in a couple of years, and I don't know if you followed the journey of Chipotle, but they are a hot growing restaurant in terms of the stock. You're like, Chipotle's old, Josh. I know, but as far as like dominant publicly traded restaurants, Chipotle is one of those, and growing those stores is a very big objective and goal for their dominance, profits, and returning investment back to shareholders. So I think that was very bullish news. It kind of didn't react tomorrow. Depending on the data and the non-farms, this one could be a very good play to watch. So I would keep my eyes out for that. That is play number 2. And then finally, here's their yen play, man. This one, we got to talk about this one a little bit. This one, I mean, I'm going to give you something good. And listen, you made it this far, bro. And I really appreciate you guys on the watch list for real. You're not one of those live lurkers who comes in because we just put this on the watch list. I just made a bigger play. I added size to it. And ironically enough, you all should have saw the yen today, but I did not get asked about this play like some of my other ones. Josh, I made the play with you. No, you didn't, because you didn't tell me anything about this. So, listen, man, you guys are watching right here now. I want to give you something, and I know people who only are here today, gone tomorrow, they're not going to get this. So, please, I want you to learn from this one right here. I like the yen long over bonds. You should be aware of that. I don't want to buy TLT and long bonds and wait for Powell to cut. I think there's a lot of risk with that. I think the yen is a better idea. Now, do you go buy the yen after it shot 5% today, 4%? You got to be very careful, but here's what I really want you to know. This is your TLT hedge. See, I love you. I don't care. I have my view on TLT. We've done our work on TLT, but it's very simple. If you are one of the TLT bros, you keep buying it no matter what, and you want to hold it, that scenario that I explained, they end negative interest rate policy, and then you watch the repatriation, it would hurt bonds a lot, but the yen would benefit off of it. So now you get the best of both worlds. The yen will be your TLT hedge. Not a recommendation. God bless you all. Make sure you like the video, but that's where I'm going to wrap it up. Those are all the other plays. I got clapped again on oil. I think, again, I was up a little bit in the morning, and then it came back down. Pretty much same losses yesterday. I'm going to ride that for the non-farms. I think a good reaction should lift it up, or it's going to go down to like $64 or $66, which is kind of crazy, but going to be in that. And then I told you the Russell, hold that. If there's enough cushion, we're going to play it. Otherwise, we'll be good. And then the yen play, like I'm saying, man, I wish people asked me about it, but not really. It's good because if you know, you know. But we did very good on that one today, and that one I'm still going to be riding, and we have a lot of time. But besides that, let's get the data. We'll be there live. Let's have a good one. And that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, take control of that budget. Take control of your behaviors. Little behavioral shifts will literally make you rich. And don't you ever forget, when you're loose with your money, you're teaching somebody how to steal it from you. Oh, my goodness. Oh, I'm going to leave it to Chad. Drink that water. You better have a good night rest. I'm going to see you in the AM. But I love you all. God bless you. And horn.